Hi, everyone. My name is David Kosmeter. I'm the creator of TimingResearch.com. This is the Crowd Forecast News show for September 11th, 2017. Today we will be discussing the 207th weekly report. If you haven't had a chance to take a look at that yet, you can go to, you should see it on my screen while I'm talking, but you can also go to TimingResearch.com and you can download that report there. For those of you watching live, you should be on the YouTube page where you can comment or ask questions during the show using the live chat section of the page. I have Rob Hanna back to host today, so I'm going to go ahead and turn it over to him.
Thanks, David. Great to be back here. Should be a good session. I'm excited. I'm getting to talk to a few new people to me. As well as one that's I talk to, I think, all the time, Jim Kenney. But we have, I'm Rob Hanna. I'll introduce myself and I'll go around and let everybody else introduce themselves and we'll get into it. I'm Rob Hanna. I'm the head of research at InvestiQuant. I do a lot of swing trading. I also do have strategies for overnight trading, meaning getting in near the close and getting out near the next day's open. We also have some day trading type strategies at InvestiQuant as well. Scott Andrews is in charge of those. Prior to InvestiQuant, I had a site called Overnight Edges, and that merged with Scott's site to become InvestiQuant. You've also probably heard of me from Quantifiable Edges, or may have heard of me from Quantifiable Edges, which I have run since 2008 and still do. And a long time ago, I used to write for Trading Markets back in 2003 and 4 and so forth. So I've been trading for nearly 20 years. I've been full-time trader since 2001. So that's about 16, 17 years now. And that's me in a nutshell. Why don't we go through, I'll let you guys introduce yourselves. Stefanie, can we start with you? You're top on my piece of paper here, so you get first dibs.
Oh, hello there. Good afternoon, everybody. Nice to meet you, Rob. Yeah, my name is Stefanie Kammerman. Some people call me the Stock Whisperer because they think that I have a crystal ball. I don't really have one of those. I am a professional tape reader. In fact, I read the dark pool tape for 24 years now. I started out in 1994 at the biggest prop firm in New York, Schoenfeld Securities. And they sat me in front of a machine called an incident machine, which was the first dark pool execution machine. And a lot of you are probably wondering, what is that? And really what it is, it's the big guys. It's where the big guys do most of their trades on an alternative exchange. I used to run a trading table back then. Now I run an online live trading room. Where I share my screen all day and I teach my traders from all over the world how to day trade, swing trade, longer term trade. We trade stocks, options, futures, Forex, and Bitcoin. Yep, we've been trading a lot of Bitcoin, Ethereum, and Ripple lately. I'm on tour right now with the Money Show and Traders Expo. Just came back from Toronto, actually, this weekend. I was presenting there. And my next trip is going to be in Dallas. So it's great to be on the show, and I'll let everybody else introduce themselves.
Great. Nice to meet you, Stefanie. We also have Glenn Thompson, Pacific Trading. Glenn, you want to tell the crowd a little bit about yourself and your trading background?
Sure. Good to meet you, Rob. I think it's the first time, but welcome again, and I'm glad to be here once again. I've been trading for so long I've forgotten. It's more than 30 years, but started out as a broker with Merrill. I'm from the East Coast, and I was working in the offices in New York City, One Penn Plaza. But shortly into that initial phase of my career, I transitioned to become a trader. And that was my interest at that time. I currently work for an institution, a teaching institution, Pacific Trading Academy, and have been with them since their inception, going back almost 20 years now. Primarily focusing on technical approach, and I do long-term, short-term, intermediate, let's see, the underlying, the options, All of the above. In my own accounts, I'm primarily focused on day trading and the ES and Forex markets. So that's what I do. As far as the curriculum and the models that I present and teach, I guess I would say that the primary elements that I focus on to construct whatever models are trend, timing, and wave analysis, Elliott. So that's big, I guess, a cursory overview of my philosophy of what I do. So yeah, that's pretty much it.
All right, great. Good to meet you and have you here, Glenn. Look forward to talking to you further.
Great.
Jim.
Yeah.
We've met plenty of times before, but
Sure.
You're probably better at telling your story than I am. So why don't I let you go?
Yeah, just quickly, I am the content provider at optionprofessor.com, and basically it's an educational firm with DVDs available to educate people on all the different ways to use the options and understanding the use and the risk of them. Everything from income-producing strategies to spreads, credit and debit, to two-sided trades like strangles and butterflies, and then, of course, hedging techniques like stock replacement. Or using short-term options as a hedge against positions rather than using stops to try to put parameters around your positions and give you maybe some better staying power than you might have already had with stops. Today would be a good indication of if you had a stop, you might not have gotten filled very good on the opening. Whereas if you had a hedge with a call, at least you might have some dirt on your uniform, but you're not bleeding quite as bad.
All right. Thank you, Jim. Look forward to talking to you more. You always have some good insights. I'm going to start off with question number one, which is, what do you think the S&P 500 will move? Is it going to go higher or lower from this coming Monday's open or today's open to Friday's close? And I'm looking for a one-word answer, and then we'll come back and I'll let everybody explain their answers. And I'll start so I can give you an example of a one-word answer. Higher. All right. Jim, let's go to you. We'll go up the list and then we'll come back down.
I would say that it's possible that it rolls over a little bit.
Okay. All right. Good. We got some disagreement.
Mm-hmm.
Glenn, how about you? Higher or lower?
Agreement, up.
Okay. Stefanie, higher or lower?
I'm going to say I'm 50-50 right now.
Oh, no. Okay. All right.
I have no bias on the S&P 500.
Okay. All right. So let's start with Jim, and then we'll go Jim, Glenn, Stefanie. We can explain what we're seeing right now that's making us think it's going higher or lower. But it's nice that we have some disagreement, and there's a lot of push and pull in the market right now. So that's not unusual. So Jim, what are you seeing right now that makes you think maybe it'll be heading lower this week?
Well, again, this is not a table pounding type thing. I'm just saying I was looking at the sentiment that came out of the survey. 60% thought down, only 40% up. I assume they all got blown out on the opening here. I'm looking at a situation where there is some news coming up later in the week that may not go, that doesn't have to break well. We got Treasury budget Wednesday, CPI Thursday, Fed balance sheet Thursday, and then Friday you got retail sales, business inventories, consumer sentiment, and industrial production. And turnaround Tuesday could come into play. And there is a very large gap that was created between 2460 and 2475. And so, with that totality of all that, and the VIX is 1050 today, again, not a table pounder by any stretch, but it wouldn't surprise me if we back and fill a little bit as the excitement of this morning rally maybe abates.
Okay. Yeah. The VIX is certainly an interesting times right there, being so low, and we've got volatility, historical volatility, especially low over the last several months. I was talking with some people at the end of last week, and we had, on Friday you had wildfires in California, an 8.1 earthquake in Mexico, floods in Houston, the biggest hurricane ever about to hit Florida, and nuclear threats from North Korea, all of which sounded like the end of the world, and the VIX spiked to like 12. So it's pretty amazing times we're living in right now.
Yeah, we got a pretty solid trading range, 2,500, 2,400, and of course it can break out either way. And right now it's testing the upper band. And if it gets a kick from something, of course it can break out above that 2,490. But if the enthusiasm abates a little bit, that gap underneath may be a draw.
Yep, I understand. Okay, Glenn, what is it you're seeing that's making you think long might be more likely this week?
Yeah, number one, I noted, as Jim did, the differential and the sentiment, and so I'm going to play the contrarian card. So I like that. That augurs for higher prices. I start with the idea that I happen to have projected a time point that comes in on Monday, the 18th of September. The significance of the time point is it indicates a probable zone or window of time within which I expect the market's going to be more susceptible to change. So my view is what type of change, and that's predicated on what the angle of approach. Currently, the trend is clearly rising. My expectation is it would rise through Monday. So Friday comes up before Monday, obviously, so I expect we're going to, just the momentum and the inertia will carry the prices higher into the end of the week. That also reconciles with the structure of the chart as observed from a wave standpoint. I'm a little concerned because we are, the current levels we're trading at right now, 2488, 2487, and we're just fluctuating as we speak, corresponds to the all-time high for most of the indices that came in on or around August 8th. So from a theoretical wave standpoint, once we hit if that corresponds to a fifth wave, which I think it does, what happens after that? You expect a correction of an ABC type. That would suggest lower prices. So you might say, well, why am I suggesting and forecasting a higher price by Friday's close? I expect we'll have some overflight and inertia, just the momentum. The other aspect of the chart is that if you look at the third wave, it came in shorter than typical. And there's this rule or relationship of complementarity. To the extent you have a shorter third wave than typical, that is made up by the subsequent fifth wave. So thus I expect we're going to have a longer or larger fifth wave than you might expect. More typically, the fifths are truncated and the thirds are extended. I don't think that will be the case. My counter argument is that if you look at the Fibonacci extensions for wave 3 on a chart of any of the major indices, whether you're talking the Dow, the NASDAQ, the S&P, they happen to be almost perfectly congruent with my projection for where the fifth is. So that would be an argument to say we're going to top out kind of sooner and then come down by Friday. But I think the trend and then the enthusiasm psychologically will carry the market to higher prices between now and the end of the week. Looking at all of those technical factors and trying to see if they fit and reconcile with what's going on in the world, i.e. fundamentally, I think there's a psychological impetus for the market to want to go up and take out and form a new high sooner than later. Combining that with, I think the next major fundamental event is not going to happen this week. It's next week, and the markets are waiting to see what the Fed does. I think it's on the 20th in terms of that. So, and my best expectation or prognostication in terms of monetary adjustments would be that they're going to delay. I think the market's already pricing that in, and I expect that's going to provide some support. Follow the bonds in terms of what allow the bonds to be an arbiter of what the stock prices are going to do. And I guess the obvious, which I think Jim and Stefanie both indicate, or Jim said, and I think you also mentioned, is we had this plethora of catastrophe in the last week or so, the natural disasters, and so all of that was price depressant. But however catastrophic they weren't. In the aftermath, we're seeing that it wasn't it could have been worse, and I think the market is knee-jerk responding to that. The insurance companies are going up. Whatever damage it wasn't, everything has been downgraded from category what to lesser numbers. So the market's rejoicing on that, and I think the momentum will just carry us to these higher levels by the end of the week. Yeah. So all of the above, trend, but primarily I start with asking what is the rotation of time points, and then I look at the structure price-wise and see what are the most probable and plausible scenarios. Currently, the market's moving up. I look at it, and I look at it in more detail from a wave standpoint. I see it's going up because it's in a fifth wave. Where are my projected targets theoretically? Does that jibe and reconcile with the time point? So again, my next time point is Monday the 18th. If we, on the assumption of continued persistence in the current tack, that would suggest higher prices through Monday, and Friday comes before, so that's why I'm expecting a higher close by Monday. I mean, by Friday. Yeah.
All right, interesting. Personally, I don't really do much with wave analysis. I've studied it a long time ago, and I haven't incorporated it into my trading really. But one thing that I've noticed in my analysis, I do some seasonality type stuff, is that next week, being the week after OPEX in September, has historically been the worst week of the year. So that would jive with your prediction of, sometime after Monday we might get a pullback here.
Yeah, that's clearly the case. There's a seasonal component. I wasn't going to mention it, but what is complicating things, at least in what I take into account, is a week for this Friday, next Friday, is the calendar quarter. There's some correlations with paper asset markets in the U.S. going back more than 100 years that indicate more macro changes and shifts in cyclical, topping. So that's next Friday, the 22nd. How that's going to interplay with what I projected coming in on Monday, I'm not certain. But yeah, there's a seasonal aspect, and especially corresponding to the option expirations. So, but again, trend rules the day. So right now, I see clearly we're moving up, and there's clearly evidence on the fundamental front as to why. And I just expect that momentum, plus the fact we're so proximal to that all-time high. I think psychologically traders want to take it to new highs before we have a correction, a pullback. Yeah.
Okay. All right. Great. Stefanie, you're on the fence, it seems, with whether we're heading higher or lower this week. So I suspect you're seeing some evidence on both sides. Do you want to share a little of what you're seeing?
Yes, please. Can everybody see my screen?
Try again. Yes.
Yeah.
You can see my screen? Okay, so again, I don't listen to any news. I don't care about fundamentals. I don't care what's going on in the world. I've called the last 10 corrections on social media before they happened, only because I see the same pattern in the dark pool every single time. There are these late sell prints that come in that are 24 hours late, and they're very heavy across the entire market on the SPY, the Russell, and the Qs. Have not seen that. This morning, I spotted a late buy print, which I'm going to enlarge for you. Can you guys see that? The SPY, the 501,000 share print. See that in orange, 246.53. Well, guess what? That's not today's trade, because if you know, the low of the SPY today is 248.02. So these trades were done on Friday, and they're not being reported until today, which should be highly illegal because the volume is going into today's candle. I see this all the time, and we have a couple of them. They're not heavy. They're not like 10 million, but we definitely have a couple. Here's one. Here's another, right? I think just maybe two have come in. Now, before we get a correction, it's the exact opposite. There's no guessing. I don't need to look at anything besides the dark pool tape, and we see it heavily again across the entire market. So I do see them hiding some buying, but I don't see anything heavy selling in the SPY. However, let's just say tomorrow, Rob, right? Tomorrow they started coming in heavy from today. We gapped down, and I see 17 million late dark pool sell prints. Well, then I'll tell you that, you know what, we're going down this week. So that's when I say 50-50, is only because the tape really hasn't shown too much today. But we have one print that just came in. I want to show you guys on the VIX. Actually, two of them. You see these guys? Let me just enlarge them. 600,000 share at 45.72, and a 400,000 just below that at 45.99. And so that's what I'm going to watch. Let me just pull up the VIX and see where we're trading there. So that's a little bit of fear. We're below the prints though. We are at 45.69, but I would monitor if we closed above 45.99, above 46, then I'd say fear is coming into the market. But right now, you know, we're just lifting up pretty much on air.
So Stefanie, can I ask you briefly, you're pointing to the SPY trade that had a huge print within the range of Friday.
Correct.
And the interpretation of that, if I'm correct, is that that's supportive of us being higher today.
Correct. Correct.
Why is it that the interpretation is that that was a big buy that's just getting reported, rather than someone big was bailing hard that's just getting reported?
Because whenever they're late like that and they show up the next day when we're up, it's clearly they were buy prints. If we got down today, I would say clearly they're sell prints. Now, and that's only two of them. We have days. How do the big guys sell 100 million shares at the top without letting us know? How do they get done without moving the market down? And what they do is, like Goldman Sachs has a dark pool called the Sigma X, and they cross their trade from their London desk with their New York desk. And when they cross the trade, they don't have to report it for 24 hours. It's a loophole that's designed for them. And it's because of this loophole that we've been able to see the last 10 corrections before they happened, because we see them unloading millions of shares the day before, but not showing us until the next day. And they pop up on my block trade indicator, which is amazing. It has dark pool data feed. Most people think that you can't see the dark pool. And it's not that they're wrong. It's just that they don't have the right software. And this is Charles Schwab Street Smart Edge platform that has it, by the way.
Okay. All right. So if we were to see a large or any kind of gap down tomorrow, but you were getting prints that were coming in from today's range or high, you know, near the highs of today,
right,
that would indicate large selling.
Oh, yes. Oh, definitely. When we see 3 days in a row, heavy, that's when I've called a correction. I've been right 10 for 10. Okay. You can go back on my Twitter feed. You can see all my last tweets. The last big correction we had was last summer, September 8th. We started to see the dark pool selling August 26th, 27th, and so forth. August 8th, we had massive prints on the VXX where we had that pop, and you can go on my Twitter feed and also see those as well.
Okay. Excellent. Interesting stuff. Thanks, Stefanie.
Oh, you're welcome.
So I mentioned I was higher going into this week, and I had a few reasons I was looking at that. I did have some studies that came up on my screen last week that looked at the fact that we had the 5 higher closes for the S&P, and then we had a bit of a pullback from there. And rarely do you get persistent moves higher. And in this case, the definition of the persistent move was just simply the 5 higher closes, and then it just falls all apart. Normally, you'll hit another high after that. And so that was one of the things that was leading me to believe that we've got more upside here to go. Also, the InvestiQuant swing edges data, which we publish nightly, it's leaning somewhat bullish right now. So it's not strongly bullish, but if we look out at our 5-day odds, it's suggesting this is from Friday's close to next Friday's close, it's suggesting a 58.7 chance that we'll close higher, or that we have closed higher under similar conditions, with an average profit factor of 1.32. And what that does is it looks back at 9 different systems and averages them all together. And there's 3 seasonality systems. There's 3 systems based on momentum, which is like persistency, and then there's 3 systems based on acceleration, which is basically how fast is the market moving and where is it moving from. So those are the different things that I'm seeing right now. And I'm also not seeing, I wasn't seeing anything particularly bearish. So I was, everything I was seeing on a short-term basis was suggesting some upside. Frankly, I was hoping for another down day today, so that I could get a few down days in a row heading into a turnaround Tuesday, and then maybe get the pop tomorrow. But the market didn't wait for me. So it's up right now, and I expect it to continue up for the week, although not a straight shot, obviously. So that's where I'm at with things. Let me go back and just kind of talk through a few more of the points you guys are making, see if anyone wants to add anything to the commentary of me or of others. Jim brought up the VIX and how low that is right now. And as an options guy, Jim, I know that's something that you look at a lot. Seems to be that there's a lot of cheap insurance out there. Is that something that's
yeah, I mean, the VIX being low is obviously bullish from the standpoint of obviously it's a big conviction of strength.
Right.
So, this thing has run up with record-breaking low VIX. So that by itself is certainly not a indicator that you can count on. But I would say that when the VIX is this low, a strategy that I've suggested people investigate, the strangle strategy, makes a lot of sense. I mean, we've seen it go down to 24.20. There, your put's doing pretty good, and then we're back to 24.90. So you're getting some kick on the calls, and the collar strategy, where these stocks like Amazon and some of these other ones that have rolled over a little bit, and even some that are near their all-time high but not blowing through their all-time highs. A out-of-the-money call, and then using the money to buy a put, and then creating parameters around your equity. I don't think those have been terrible ideas. And then, like I say, hedging your position. Say you did take a sell position before the weekend because you thought it might pull back, and you put a stop, at 24.68 or something. You're filled today way higher than that. Where if you had a weekly call option that might have cost peanuts, you're still able to hold on to your short position possibly, and leg out of one or the other. So there's a lot of different uses of these options when the VIX is low that are kind of interesting if you know how they work.
One interesting thing I've noted recently about the VIX also is that the VVIX has actually gone up a bit, and we've had a lot of movement in the volatility of the VIX, basically, right? So it's jumping up to 13 or 14, and then back down to 10, and wiggling around a lot like that. But it's not, option prices are generally low, but there's been a lot of movement in the VIX back and forth as compared to 6 months prior. And that could partially be the fact that there's so many people playing the short VIX trade now. Is that something that you get involved with? Is that something that concerns you? Because we've seen, even Friday, it was a relatively small move in the market. It was mixed. We had the S&P and was down. I think the Russell was up a little, and the VIX was up, 7 or 8% or something, which isn't a huge amount, but it normally doesn't move all that much when you've got like a 2-point move in the S&P. And
there was a big gap on the VIX from the 10 area up to 11 and change, and then it ran all the way up to 14. So that gap that was between 10 and 11 and change has been filled now, and so that's why I've been looking at a few different things that had gaps, and then they got filled. So that's why the next few days here, as we go into some of these reports, I know a lot of guys who go to these broadcasts don't listen to anything but the technicals, but the markets do look at some of these things and react accordingly. Like, again, today's action had to do a lot with that we didn't totally wipe out the state of Florida, and that's not a technical thing. That's a fundamental thing. But the technicals were already, positive on a long-term basis. And then with the survey being 60% negative, the sentiment had turned a little bit negative. So all these people who were short obviously are, covering, and a lot of people who want to get long are in there. And the market makers, because the volume's coming in so heavy on the buy side today, they're raising their offer and say, hey, you got to cover or you want in? Well, you're up here at 2,500. Come on in.
Yep.
Now, if there's no orders behind that, that's the whole concept of that it could pull back a little bit. But, obviously you're fighting the tape at this point, and the smart thing generally, is not to fight the tape.
Okay. All right. Thanks. Glenn, you mentioned the Fed. They've got the meeting next week on Tuesday and Wednesday.
Right.
Do you want to expand on your thoughts with regards to the Fed at all? I know one of the things that's on the table is the fact that they may stop their reinvesting of maturities.
Right. That's correct. There's talk about it, and this is out of my realm of expertise, but what I'm aware, because I don't start with the fundamentals, but my understanding is that they're planning to start some sales, which would indirectly have the net impact of raising rates. So there's been talk about that at the last few meetings by Yellen and company. But to the extent the market, the equities are rising in the face of a rising interest rate environment, is ostensibly bullish and price supportive. So if we begin to see that, it's supportive for a number of reasons. Number one, it just says in the face of a rising interest rate environment, however that occurs, we're still seeing, cost of borrowing going up and stock prices are rising. That's just outright bullish. But it sends another message, I guess, longer term out to the future, kind of by export, that we're not going to have a direct, by edict rate increase at the meeting in September. Possibly we're going to delay it at least, out to December, where they've indicated that would, and if they do, that would be the third time in 2017, which they've been saying going back more than a year. So that gives the market a breather. It says, okay, we're not going to see any direct adjustment to the Fed funds rate. So it's another reason that the market would cease to just move higher. So that's my, there's probably other factors more nuanced than that, but that's the best explanation I can provide. I don't monitor Fed activity intensively, but I'm aware of that phenomena that they're saying. Another point I wanted to mention, if I can share my screen and to kind of play devil's advocate a second, can you guys, let's see if, can you see the chart, folks?
Yes.
All right. I'm going to argue against my call. I'm bullish. I'm expecting higher prices by the end of the week. But to illustrate graphically the point, and it will touch on a few points here. This is just the daily ES. Here, the 61.8 fib is a theoretical ideal for an ideally formed fifth wave. So if you can see from this bottom here, August 21, if that's the start of an initial thrust, a bull set of 5 waves, a move up, here's the end of one, this top, on August 23, your deep correction wave 2. Your 3 would be right here on the top on September 1. Your little, that's a rather deep 4 wave, but I'm going to use it. And then if that is the case, if there's any legitimacy to that description, then everything off of the bottom from September 5 through where we're trading right now would be a fifth wave. Well, where would you expect that to cease? Right in at the 61.8, based on a theoretical, ideally constructed structure. Well, we're right there, and we've exceeded it. Notice the proximity to the all-time high on August 8. That would be an indication, as I mentioned, to pull back and begin an ABC correction. Further strengthening my bearish count would be, okay, take a look at this level. That's coming in at 2486 or thereabout, 2485.86, just a couple of points off the all-time high. Okay, so keep that in mind. I'm going to overlap a different projection. Where would you have an ideal third wave? This is, I can look at this and see this is shorter than typical for a third wave, because thirds theoretically are going to extend out about 1.618, again using a Fibonacci of 1. So if that's wave 1, pivoted off of the end of wave 2, look at, here's the 1 point, here's where the third should end up. It didn't. Here's where this is the theoretical target for wave 3. Here's the actual ending of wave 3. If there's anything to this description, let me make sure if you can see that.
Okay.
Okay. So the actual wave 3 is here. My theory tells us 70% or so of the time thirds should trace up easily, conservatively, at least to this level, the 1.618 marker. The fifth should be 61.8 or 60, rounded up 62% of 1 through 3. So we're right there right now as we speak, basically, in today's intratrade. So that would compel me to add greater attachment to the range we're trading at, the upper 32nd of today's range. Also noticing again, look at as we're ticking kind of right, toying with the all-time high. That's the point. So that could be looked at directly as bearish, saying, well, if we're already there and we've got on 2 counts, 2 reasons why you would expect we should be running into significant resistance right in these levels, why not? Why am I calling for a bullish market for the remainder of the week? Based on that complementarity principle. In other words, if we had a shorter than typical third, that usually there's typically an inverse relationship for the fifth. And that's what I expect will rule the day. I think the fifth will make up for the underperforming third with the net effect of forming a new high by the end of the week. That's my expectation. The other point is obviously the longer term traders in the market who are short, we're probably, as if we can close above this top, if we close above it, we're already intra-period above it today. If we close would improve the odds for beginning to trigger some of the buy stops at the shorts in the market, and that should serve to accelerate. So that's just a view of what I was saying earlier as to why I'm bullish. That's all.
All right. Thanks for sharing that, Glenn.
Sure.
Stefanie, just quickly to you, and then I want to get to our question of the week. I'm wondering how much you use how much you find hints in the dark pools leading up to events like Fed days and things like that.
I've seen everything. I've seen insider trading on Wells Fargo 2 days before the fraudulent bank news came out. I spotted them selling. That's on my Twitter account. I spotted massive trades coming in on TVIX the day before Brussels got attacked with a terror. Crazy. Those are the craziest prints that I've ever seen in the dark pool. I've pretty much seen 40 minutes before Comey came out and reinvestigated Hillary Clinton, I spotted somebody buying 900,000 shares of SPXU, which is the bear ETF of the S&P 500. Yep. I've seen everything. I'm going to tell you, because it's always in the tape. Okay, always somebody knows before, and of course, how could you not want to make money on it and do a trade? I mean, that's right. So as long as you know how to read it. But I do follow equityclock.com as well. I absolutely love this site. And here's the S&P seasonal chart, and you can see that we are supposed to make a new high, which we're kind of doing right now in September, and then a big correction going into October. And so we've been following seasonality to a T pretty much, but we're going to see the big boys selling at the top, because we always do, and then we'll see them buying at the bottom. So before President Trump got elected, everybody's calling this the Trump rally. Well, guess what? The dark pool was buying before the election, and I have pictures of all those prints if anybody's interested in seeing that. It didn't matter who won. If Hillary won, it would have just been called the Hillary rally. But so it's not Trump that made the market go up. It's the dark pool. These are the guys that have all the money. And of course, the S&P 500 hit the 200 simple moving average on the daily chart, which is a buy zone between that combination. But yeah, so yeah, we see prints in the dollar today. I can show you. We had some prints. I tweeted it out on the UUP, which is the dollar ETF. So before every move on the dollar, we've seen the dark pool buying UUP or USDU. Today they were buying at $23.80, and it's higher, $23.85. And that's definitely pulling down on gold. Also today, massive prints just coming in as you guys were talking. 800,000 share print on XOP. You can see there 800,000 shares at $30.26. And right now it's trading right on it. If it closes higher, I'm going to definitely take a position on this, but I'm already in Halliburton right now. We had massive prints last week on Halliburton. You can check out my Twitter feed. It was a 4 million print came in on Halliburton, $39.65 on September 5th. And so it's been trading higher. So again, the prints first, and then the news. They'll find somebody to talk about why something is up or down, but it always starts with the actual print.
Okay, which leads us nicely to our question of the week, because I think I'm going to know your answer as I'm about to ask it here, which is what indicator influences your trading the most?
Okay.
And I'm betting it's going to be dark pool volume.
The tape, yes, absolutely. 24 years. It's the tape never lies.
Okay. Let me then ask that that same question of Glenn.
Sure.
What indicator influences your trading the most?
That's easy. Market timing. On the philosophy of a market's going to do whatever it will do once its time has come. Everything else. Now there is. I hold out for a caveat on that, because I am the pure technician portion of my cognitive gray matter says price does discount everything, all that's known and even the stuff that's not known. But if you pardon my discretion and allow me to shift into the fundamental side of my hemisphere of my brain, the reason price discounts everything is because its time has come. Be everything you can name from A to Z. So my starting point for everything I do on any scale, whether I'm on a 60-second or a tick chart or a 200-year chart, or anything in any time window, is whether or not the time for a particular regime is still in place, or has the market stayed too long overstayed its welcome in a particular trajectory. If it's not, I expect persistence and trend analysis and the momentum and inertia to carry the day. If it has, then that allows for the onset of a new regime, and thus we call it a turning point. So that, clearly market timing is, and I'm about 80% in the ballpark. So yeah.
Okay. And Jim, what about you? What indicator influences your trading the most?
I like the moving averages, and I try to use the longer term averages as kind of like the main highway, and then look at the shorter term things to get a little bit more of a shorter term trading aspect. And that's one of the reasons why I'm a little concerned and have been concerned with the stocks in the last few months, because we have a large differential between my long-term moving averages on the monthly and where we've been trading. It's about a 300-point or has been as much as about a 300-point differential, which historically is a very excessive level. So this concept that Stefanie was talking about, that after this September enthusiasm wears off, that October may have us gravitate a little bit back towards that averages, and maybe things will not break on infrastructure and the tax cut and the tax reform as well as people are hoping, and that could be the trigger that might sober up the prices a little bit, because clearly we've been in a trading range for a long time here of 2,500 on the S&P, and it's obviously because people are obviously waiting for something, and I would imagine they're waiting to see if we're going to get a huge repatriation off a tax cut, or we're going to get a huge 15% tax reform. And if those things don't pan out or shake out exactly as people are hoping, that could be the trigger that takes this thing either up towards 2,600 or back towards the 2,300, 2,250 area by the end of the year. So it could be a very, between now and the end of the year, obviously this 100-point range will probably get resolved one way or the other.
Okay. Yeah, I'm with you as far as I was thinking about what I was going to answer for which indicators influence me the most, and I couldn't decide between two of them, but one of them was, long-term trend. It's my intermediate term analysis that sets me up for the direction I'm going to trade. Even though I'm a swing trader, I'm a short-term trader, I might only be in a trade 3 or 4 days, but if we're in a rising market environment, I'm trading the bull side more aggressively than trading shorts, right? And if we're in a downtrending environment, then I'm I'm looking more to short and being a bit more conservative with my longs. So long-term moving averages are a great way of seeing which way the trend is going. The other thing that I look at a lot is Fed liquidity, which is something I've looked at for a long time, and I am concerned with starting as soon as they start, or as soon as they stop reinvesting maturities next week. There are the system open market account, which is the account where the Fed holds all their bonds, has grown an awful lot over the years, and it's really remained steady since the beginning or the end of 2014 when QE3 ended. But the last time it saw a drop was in 2007, and when it sees a drop, that often takes liquidity out of the system, and when we don't have as much liquidity, then there's not a whole lot to back up the sell-offs. And we saw what happened in 2008, and then they had to really pump to get things going. So hopefully we don't see anything like that again. But it does concern me going forward once they start tightening the liquidity and stop reinvesting maturities, and we'll see that SOMA account shrinking. So the Fed and the long-term trend are the two things that I look at the most. All right, so thanks everybody. We've had some interesting stuff. What I'd like to do is go through and let you just kind of last word. Also, if you have a stock pick for the week, or a trade pick, I guess, not necessarily a stock pick. It can be Forex. It can be options. It can be anything you're thinking of looking to trade this upcoming week. Then I would say go for it. And if you got anything going on at your site that you want to share with us or tell us about, please do so. So why don't I mix up the order, and we'll start with Glenn, right in the middle of my page there.
Sure. In terms of a stock pick or a market pick, I'm bullish NZD, New Zealand dollar, and the Forex front. I wouldn't buy it. I wouldn't establish, and I'm bullish, so I wouldn't establish longs right now, but we've got what I expect will be decent support at 72.38. I think we're trading at, hold on a second, around 72.50, 253 area. One moment. Let me double check. I lost my quote. Yeah, 72.53 is the current level. On a pullback to 72.38, I've got critical support, and I'm going to go long in Kiwi or NZD USD. So again, I do a lot of Forex trading in my own for myself. That's one situation. I'm also on I'm also long as a position trade in the market in the ES. I agree with Jim's trade. If one is on the side, or Jim's analysis, if you're on the sidelines, a more conservative tack would be some type of collar strategy. Certainly, if we see a breakout on a closing basis above where we're trading right now, congruent with the all-time high at 24.88, I would initiate longs, but I would not if we do so. I would wait till next week, given my endpoint as a short-term trade. If between today and the end of the week, on a breakout above, again, the 24.88 level, I like long positions in the stock market, with the idea that we could be forming or running into critical resistance at the beginning of next week. So those are two ideas. I'm in a bunch of positions as we speak. I'm long term as a position trade in gold and silver as well, curiously. But again, two major ideas. If we pull back to support in NZD at 72.38, go long, and then more conservatively, I like collar type long positions in the major index. Those would be two positions. To wrap up, again, as a quick overview, I basically teach all forms of technical analysis at Pacific Trading Academy. So I've worked with all types of traders. So if you're interested in any of our programs, feel free to look at our website, pacifictradingacademy.com, and myself and my coworkers are there for the picking. So yeah, thanks for having me again.
Great, thanks, Glenn. Great getting to talk to you.
Great.
Stefanie, how about you? Want to tell us anything that's going on at the Stock Whisperer right now, and also offer us any ideas you might have as far as trades for this week?
Oh, I got tons of trades, but I'll just give you a couple, okay?
Yeah, don't give us all of them.
I don't care. I don't mind sharing, but I just got a very unusual print that just came on United Healthcare, UNH. I mean, this is expensive, $199.62, and it's a 300,000 share trade that just printed. So $199.62. So, you know, definitely something to watch. One of my traders in my room just called this to my attention. So, yeah, watch the 200 level. If it does go above that or breaks below 199.50, I would go short. But this morning, so every morning I put out a free YouTube video called The Whisper of the Day, and you can go to my website, and again, it's free. I have a YouTube channel, 4.5 years worth of videos. It's my hot stock pick every morning, and I have a 90% success rate on it, which is pretty crazy, but it's because I'm following the tape. So you can listen to all the videos if you have some free time this week. But this morning's video focused on AT&T because we spotted some buying on it Friday. Let me just show you. It's my Live Old Pro software. I can go back. Some really massive prints on AT&T. $35, $35.25, $35.36. Here's a 700,000 print, an 800,000 print. And so I love to take that and combine it with seasonality, which is fantastic. And I actually met Don and John Vialou, the guys that are responsible for Equity Clock in Toronto, this weekend. So I told them I love their website. So look at this. September is the start of a massive move. Over the past 20 years, this is what AT&T stock has done. And we have big prints. As long as it stays above that level, that $35 level, especially $35.36, I'm going to be bullish and will add on to this position. But also this morning in my Whisper, Starbucks. Love Starbucks. We also had prints on that at $53.35. And also Equity Clock. It is the season for Starbucks. All the college kids love Starbucks. In September, you can see seasonality starts. So you have prints and, of course, the seasonality start. And yeah, if anybody's interested, if you want to learn more, I trade live every single day. I'm sharing my screen. I call out my trades in real time, live, when I'm entering, why I'm entering, when I'm exiting, why I'm exiting. It's an educational trading room. You can try it out for 30 days. I have no salespeople. 30 days, try it out for $9.95. You're either going to come in and say, Stefanie, where have you been my whole life? I love you. Or you're going to come in and you go, it's just not for me. And that's okay. Not everybody wants to sit at their desk all day and do this, but they want to know where the big prints are coming in. And this is why we have developed our brand new dark pool app. If you want any more information on this, we will be sending push notifications right to your phone when something big is happening across the entire market, whether it's gold, oil, the S&P 500, natural gas, the dollar, you name it. I'm going to be sending you out push notifications to your phone. You can come visit my website at www.thestockwhisperer.com. And thank you so much for having me on your show today. Great show.
All right, thanks, Stefanie. Good luck with the app. And Jim, let's go to you.
Sure.
Tell us if you got a pick of the week, that'd be great. And what else is going on in Option Professor that you might want to let us know about for the time being.
Yeah, well, with regards to what I've been seeing and my opinion really hasn't changed much in the last few months. We're in a range-bound situation. Markets lying in wait. And how these things break is probably going to determine how we move out of this range. And the range has been going on for so long. You know, obviously, another question is are we in an accumulation phase or a distribution phase? And that answer is not known. to me anyway. So since I have an unknown situation, but I think the clock and time is running out on this range, I have suggested and will continue to suggest people investigate how the collars work, especially if you have large positions in the market. And I'd also suggest people who want to do trading look into how strangles and butterfly positions work, which are two-sided positions on either side of the market. And then rather than trying to pick a side, you're basically just betting that volatility will occur between now and the end of the year or whatever time parameter you put on it. You know, like I say, education is power. These options can be used for so many different things. It can be used in concert to your other trading. It could be used to create some cash flow. It could be used for just taking a leverage, limited risk speculation on something where you know exactly how much money's at risk until they expire. And so that, you know, again, when you look at a situation and you have a full understanding of a wide variety of option strategies, it might be helpful in other trading that you're doing with the stocks and things like that. So my suggestion is, again, investigate those strategies. And Option Professor has the DVDs that explain them, and then see which one might be appropriate for your circumstances.
All right, great. Thanks, Jim. I encourage people to check out Option Professor, as well as the other sites here, Pacific Trading and the Stock Whisperer. I hope you also check out Quantifiable Edges. Take a free trial there anytime, as well as InvestiQuant. I write the InvestiQuant Swing Navigator each night, as well as the Quantifiable Edges subscriber letter. Both take slightly different looks at the market. And free trials are available for both at any time. We're also doing a lot of other things at InvestiQuant, auto trading and for intraday portfolios, as well as now we have some swing trading automated portfolios, which is exciting. That just got released a week and a half, 2 weeks ago. And it's based on all the stuff I've been doing in the Navigator for the last few years. So please check out InvestiQuant and Quantifiable Edges. As far as a pick of the week, one thing I'm looking at right now that I like a lot is XIV. I think the market is going to continue to go higher this week. XIV is an inverse VIX play, and I know the VIX is already down quite a bit, but we've got very strong contango right now, which will help XIV as futures roll. So contango's at 13%, and we've also got a strong roll yield between the cash VIX and the futures VIX, which is close to 13% as well. The futures are going to roll next week on Wednesday morning. And we've also got the Fed meeting on Wednesday. So this is a short-term trade. With the Fed meeting coming up, a lot of times you'll see VIX futures move up a bit as we're starting to anticipate a move or a reaction to the Fed. And then you've also got lower roll yield when you get to the next month, which will happen next Wednesday. So this is a trade you'll probably want to be out of Friday or Monday. Monday morning, perhaps, and but I think you could get some additional follow-on during the week this week, assuming the market moves even sideways. So that's where I'm at. Thank you to all the guests again: Stefanie Kammerman of the Stock Whisperer, Glenn Thompson of Pacific Trading, Jim Kenney of Option Professor, and thanks, David, for having me and putting together such an interesting panel again.
Yeah, thanks everyone. Great show. Just want to remind everyone watching, be sure to hit the subscribe button on YouTube to get updates on future shows if you haven't yet. Also, be sure to join us tomorrow night, September 12th, 9 p.m. Eastern Time, for the third episode of the new Analyze Your Trade show, where you can submit your stocks to be analyzed live by the guests. Stefanie will be back with us for that one, and as well as Mike Bassani of Alpha Shark. That'll be his first time on either of the shows. As well as Anka Metcalf AJ Brown and Dave Landry will be moderating. And I just want to thank my guests again for this week: Stefanie Kammerman of thestockwhisperer.com, Glenn Thompson of PacificTradingAcademy.com, Jim Kenney of OptionProfessor.com, and Rob Hanna of InvestaQuant.com. Thanks, everyone.
Thank you.
Thank you, guys. Thanks, everyone. Yeah.